Welcome guys, welcome to another Cardano ADA video. As always, let's start here on the monthly chart. We are still fighting with the 23.6 Fibonacci retracement level at 91 cents, but I'm pretty confident that this monthly candle will close above this resistance because of how the lower time frames are looking right now. Once we are above this level here, we have to look at the red line at $1.10. It should be, or it could be, the next resistance, or maybe even this resistance area between the highest monthly candle close for the cycle yet, right? We did in November 24, and this wick high here at $1.30. Which is in line with the 38.2 retracement level. So yeah, I expect to chop a little bit around here, and before we can actually take the next level here at the 38.2 retracement level. So once we can close higher time frame candles above this red line, it would be a very bullish sign. And once we took this level here at $1.33, we activate all the other higher targets. Let's have a little recap of the most probable scenarios for Cardano ADA in this cycle, in my opinion. Let's start with the most probable, the nested inputs or the double 1-2 setup. And for that, let me derive it. For that we have to go we have to go back in time into the first cycle here for ADA in the bull run 2017-18. Here we did the first wave. First impulsive breakout, roughly 10,000%. It was almost as crazy as this run here, and followed by a huge correction, the most severe correction for ADA, for the ADA token so far in a wave 2. We then went into the bull market here, which was the previous bull market in 2021 and 2020 and 21, and we saw this third wave here, followed by a huge correction. I think it was over 50% in just 2 months. So it was a very severe correction, but still not validating the wave 1 price territory, at least with the candle closes. Right, that's what is important. And eventually we saw this wave 5 to close this macro cycle wave 1. We then again saw a huge correction to wave 2. This time it was not as severe as this bear market here, and followed by another more bullish phase, which is the current cycle. So we are now assuming a wave 3, and a wave 3 is most of the time the most aggressive, the most percentage gains move within an impulse. So it is indeed a special wave, and you need to prepare for this move. You can't just have a bottom and then go straight up. I mean, this is what people expect, but this is not how reality looks like. Unless you're looking at meme coins, but they will also retrace 99%. And then they will stay there most of the time. So the market has to prepare. It has to build a ramp to get into a wave 3, and this is what we would have. We would be doing here according to this model. So, but where are we in detail? If we look at this nested impulse sequence, which I am tracking here in almost every video, we are going to do this until it gets invalidated. And so far it is following the projected path. And we bottomed here in a wave 2. This wave 2 is, or this impulse here, this possible impulse is nested. It is nested into this impulse here, right? You have a 1-2, and this 1-2 is nested into it. So you now are in this circled wave 3, right? We're here, and this wave 3 should lead us into the $2 price area, but we're going to talk about targets later in more detail and when to expect them. Now let's have a look at the wave 3 in a little bit more detail. Due to the nature of a wave 3, right, it's the strongest move, it's often extended, and therefore it has a nested structure itself, right? Another 1-2 1-2 in this wave 3. Now let's have a look at the daily chart. We can see that a little bit better here. Right, you have your bottom here in wave 2, and now you start into this wave 3, which begins with an impulse in wave 1, ABC correction into wave 2, hitting the 618, then again 5 waves into a wave 1, and a little bit more complex correction here, wave 2, hitting the golden pocket. And now we do expect actually more serious of 1-2s, because this should be now this wave 3 in brackets, blue, right? And the stronger, the farther this move will reach, the more 1-2s you will actually need here. So there is room for another 1-2, maybe even a triple 1-2, to then at some point lift up. Right? At some point we will stop doing this 1-2, 1-2, 1-2 preparations. Right? This was, you could say, this was the preparation for the higher degree trends. This was the preparation, this 1-2, and this 1-2 was the preparation for the highest degree trends, or even more higher degree trends. So then you now go into another starting ramp or launch pad for the lower degree trend degrees, right? So at some point we just will stop seeing this 1-2, 1-2 behavior, right? Big move up, big dump, big move up, big dump, but creating higher highs, higher lows. At some point it would just lift off and go ballistic. I don't know if it is going to happen this week or next week. I think it is going to happen somewhere in September. It could also happen next month. So, right. So, but for now, by looking at the structure, judging by the current structure, there's just no room for another rollover, right? That would be, I don't know. I don't think we're going to see that. Maybe this leg here, maybe this extends, right? And you have an A, B, C or W, X, Y, and you find your second wave 2 here and then lift off. But I don't think that we are going to take this low here or anything, right? That this is another part of a correction, right? A, B, C, and then we have no time for that, right? It is possible, and it would be technically valid in some way, but again, we are actually in an altcoin season. Bitcoin dominance, you could say, has rolled over. There is lots of evidence to suggest that altcoins are going to see a very strong phase near term, not in 2 or 3 months, basically now. So another interesting scenario is this leading expanding diagonal here. In this case, we are tracking 5 waves to the upside, which then will complete this first wave and will eventually lead into a bear market, into wave 2, and could be followed by a bigger wave 3, a big bull run in a few years when the asset class is more mature and we have more liquidity. So is this realistic? A big trend or a 5-wave sequence can be initiated by a diagonal, but most of the time it is a contracting diagonal, right? The contracting fashion is much more likely. I think 80 or 90% of leading diagonals is in a contracting fashion. So if you have an expanding structure, it's more likely to be the wave C or the wave 5. So this is this is not a C and also not a 5. So highly unlikely that this is actually a leading expanding diagonal, but I keep seeing this. Many people are charting this, and we have to keep this in the back of our minds. And it's not even that bad. I mean, even if it is the case, and we are here, we get rejected here at this trend line at some point. It really depends on how steep this move is going to be. And if it's just one straight line, we could get rejected at $1.60, $1.70. Maybe it will be something like this, and we could actually even reach $2. So there's many ways how this wave could play out, and but $2 would be a realistic target even in this rather bearish bullish scenario, or a slightly less bullish scenario. So are there actually bearish scenarios that I should mention? No, because they just have very, very little relevance right now. you could say this could fail here, and we then continue the downtrend here. Very little data that would support this, because it would have to be an ABC, which is not possible, because this is a complex structure here, and an ABC cannot contain a complex structure in its first wave. So what would be more likely, if we talk about bearish scenarios, that we have a WXY complex correction here in A, and this could even lead to a new high in B, and then collapse into another impulse to the downside in C. So this could still be a correction, right? This could be this 1, 2, 1, 2, but the 2 is not yet in, right? In that case, we would just delay the real bull market. So in which scenario could that happen? I don't know. Something catastrophic happens in the financial markets, a war escalates, or an alien invasion. I'm just kidding. I'm actually not kidding. So something like that could create that. I don't really think it's highly likely, but this is something we have to keep in mind, right? So the bullish scenarios right now, 1, 2, 1, 2 into wave 3, or this diagonal to the upside, that are the preferred scenarios right now. So let's conclude this video with a quick look at the lower time frames, and I will give a quick price prediction afterwards. So let's start. We broke out of this wedge here, and in the previous video we were speculating that this here could be the bottom because of the Fibonacci time relation. It hit the 1618, which is typically the end for a complex correction within a wave 2, and I was pointing out we could see a final squiggle. We exactly saw that. That was the final squiggle here, and it was not creating a new low. So this was the beginning of a new trend here, and yeah, it is clearly an impulse, right? You have your starting phase here, your starting ramp, your 1, 2, 1, 2, and you go into this wave 3, and then you work off these this series of 4 5s, right? 4 5 4 5 to finish this first wave here. And now we are waiting for this corrective move here to bottom. It could already be in. I mean, it hit the 0.618, and it could be now a trend continuation. We have to be open for another downside squiggle here, maybe into the golden pocket or into the 786. So yeah, that's certainly a possibility. But yeah, overall, this here is impulsive. This here is so far very corrective, and I do expect a trend continuation. After wave 1 comes wave 2, and then comes wave 3. And yeah, let's have a look at some targets. Where could this move end, right? Let's just pull the extensions. Let's say it bottomed here, or let's be a little bit more pessimistic. Let's say we will see a final squiggle into the lower 80 cents area, and then we hit a very common target for a wave 3. It should be $1.10, right? This wave 3 here, and it could also hit the next target would be at $1.26, which is the 261.8% level, which is also very common. Let's look where the 200% level is, $1.15. So it should be this wave 3 here should yeah, at least reach into this resistance area here. Maybe it will just pierce through. Maybe we will consolidate here first, right? I think, let's say moves like that. We see this move here. It could hit $1.30, get rejected at the monthly Fibonacci at a $1.30, the 32.8 retracement level, and then consolidate in this wave 4 here before we then yeah, can actually proceed to higher prices, to activate the higher prices, as I mentioned in the beginning of the video. Okay, that was it, guys. I hope you liked it. leave a like if this helped you. Comment if you want to discuss what I was talking about here in this video, or if you have any suggestions. And yeah, subscribe for new content, and see you in the next one.